some of the content I'm going to share with you today is more around the philosophy of how the group tries to innovate, to keep looking at the next thing, and then focusing on our smartphone-enabled DQ Track solution, which is very much our IT solution around driver monitoring. So basically, a big part of the innovation within Discovery stems from creating a core purpose and trying to bring people around a common goal. And pretty much that function draws us to move and think about the things that we do within the business. So the core purpose is to make people healthier and enhance and protect their lives. Within Discovery Insure, it's to make a nation of great drivers. And that powerful why sort of stems to another part of the business in the how of how we actually manifest innovation. And we do this through a concept called shared value. And basically, shared value, which has been in the business since it's incepted around 94, 95, is the concept of being able to take incentives to drive a change in behavior. That creates a surplus or a savings for the business, which you drive back into the incentives to keep changing the behavior. And that virtuous cycle basically creates a goal for society, for the business, and for the member at the end of the day. Part of the innovation within the group is also to create ambitious goals. The goals drive the business units and push them to innovate within their respective industries. So for example, before I speak to this slide, each business unit is incentivized at a management level to reinvent itself or to reinvent new products every single year. It's a non-negotiable. It affects the management incentives at a very, very high level and pushes everyone to drive to keep adding new product to their product suites. And what we did in 2013, or what was set by the group, was to create an ambitious goal to be the best insurer in the world globally by 2018, which, as you can imagine, is very, very ambitious. But it was more around the goal setting rather than around, what can you actually achieve within that period. And as the years went on, we managed to manifest or cement sort of what that actually looked like. What does it look like to be the best insurer? And it was driven around these pillars of impact, foundation, and each business unit. The impact was financial goals, so things like CPR plus 10% growth profit. I'm not going to go into all the detail. Foundations was trying to draw all the sort of discovery, sort of intellectual property, systems, processes onto one chassis, one Vitality chassis to be able to feed each of the different business units and to create that platform by 2018. And then that each business had to be, amongst those 5 top priorities, an insurgent within their business, meeting complex consumer needs and delivering exceptional service. If the business unit couldn't fit into those areas, then a business unit won't be created within the group. So that's just a goal that we try to achieve. We're getting there. Towards the end of 2018 will be where we will measure ourselves. How are we tracking? We're doing okay. We're probably now at 7 million Vitality members globally, so we're not at the 10. CPR plus 15 was where we were at our mid-year results, but it's not really about how we track, but just about the goal setting, and we're already setting new goals for 2023 within the group. So turning more to Discovery Insure specifically, this just also gives you a sense of how we've tried to innovate within the business since we launched the business in 2011. So we launched the business in 2011 with this concept of can you change behavior by using telematics technology to change driving. So you can see the very first one was around the BP, fuel rewards, the DQ track system around that. I'm not going to go through all of it, but basically we started adding product suites. Some of them are pricing specific, some of them technology, but all a theme to try innovate and add new product units into the business as we grow. So some of the things in 2014 was when we added the smartphone solution, which I'll talk more about. We did our Uber deal at that stage as well. And then recently in 2017, we've added some innovations around young drivers and smart insurance. So that just gives you a sense, sort of, the drive of how we try push innovation within the business unit. And those innovations have obviously helped us grow to the extent that the Discovery Insure business has over the last 6-7 years. Now at 3.7 billion in API, and also at a great growth rate of about 30%. So one of the fastest growing short-term insurers now in the space. And obviously not, and with, as I say, not by accident, trying to methodically drive that innovation. And I think what's also core is that we don't sort of take stock of what we've done. We always try sort of that's in the past and just keep thinking of the next thing. We now have about 200,000 just over vehicles on cover. Okay, so the shared value model, which I spoke to in the first initial slide, the way it translates within Discovery Insure, for those who haven't seen the product, basically what we do is we install telematics units into vehicles to monitor driving behavior. We give you a reward, a 50% discount is the headline benefit in fuel. On your cashbacks from your fuel. We give you smaller rewards like active rewards. As you drive 100 kilometers in a certain manner, you'll get like a smoothie or a car wash, etc. And that driving behavior, that change will lead to lower claims. And that lower claims we can push back into the incentives to create new products and to drive the behavior change. And then because of the uniqueness of the technology and the telematics, we not only using it to drive a behavior change, but we're also using it to add value-added services to clients, mainly around safety benefits, such as calling out to you if you're in an impact, etc. Often those translate to something far more beneficial than the core insurance or the actual rewards, and that's how it plays out. Just turning a bit to telematics in general, and specifically insurance telematics and how it's growing globally. So it has been slow growth for insurance telematics around the world, although between 2015 and 2016 is when we saw our biggest growth. Italy leads pretty much the market with a 15% penetration. But from here on in, there is a massive expected growth in insurance telematics at a global scale, and it's probably as a result of the changing technologies, which I'll speak to in the next slides. But if you look around the world, the global positioning around it has pretty much been premium reductions or discounts. So you drive well, you get a premium discount. We haven't really seen rewards mechanisms or really applying the shared value mechanisms in this model in a global scale. So obviously, as I said, as there's a change in the technology and the growth in IoT in general, we're expecting to see a massive jump in the take-up of insurance telematics products in a global scale in the coming years. So basically, turning to the technology specifically and the enablement, the way you can enable a telematics program through the technologies on the baseline is either through a black box device, which you physically fit to the vehicle. You can get an OBD unit, which you can place in the OBD port. You can now get smartphone applications that you can just download an app and you can monitor your driving, or you can try get the data directly from an OEM or the vehicle source and get it from there. Each of them have their own various pros and cons. Globally, the OBD has been the predominant device. Black boxes, for example, are logistically difficult to fit. They're high cost, but they tend to give a more accurate, for better word, driving behavior data, and obviously don't need any secondary devices to enable it. OBD is similar, although you can self-install the unit, but it has some complexities related to the vehicle and what information you can get out of it, and what are the protocols around installing in a manufacturer's OBD port. Smartphones as well is obviously an easy way to roll out insurance telematics. You can get an app onto somebody's phone pretty quickly, but then you've got the complexities of how do I make sure I'm getting the right driving behavior when the phone's moving around, it's not stable, etc. Can I have selective behavior in terms of when the user chooses to send me data or doesn't choose to send me data? So these are some of the things that you need to consider when looking at those solutions. Within Discovery Insure, we started with a black box installed unit, which we still do today. We put that in. But in 2014, we launched a smartphone application to monitor driving behavior. As you can see, when we looked around at that stage, there were probably only 3 or 4 providers globally that were offering smartphone solutions. Quite a complex problem to solve in terms of how you manipulate that data coming out of the devices. So very few players in the market around 2010, 2011, that sort of timing. But it's grown quite a lot, and today there's probably about 33 different providers globally now offering some form of smartphone insurance type monitoring solution. Each you have to look at in its own merits in terms of how it performs within giving you the data. So what we've gone to market with in 2014 was a smartphone solution, but what we also did is we built an IoT-enabled sensor which connects with the device. And I'll explain to you in the next slides why we chose to do this. But basically, this device will be able to monitor in combination your acceleration, braking, cornering, speed, and being able to check if you're using your phone while driving. Distracted driving is becoming a massive problem globally, and there's a lot that needs to be done in this space. The data we collect, we monitor about 15 times a second accelerometer data, 1 times a second GPS data. So we're collecting quite a lot of data around how the vehicle is being driven. And then, of course, when you look at the data, and it's not only around the smartphone solution or the data we're collecting there, but holistically around the program, you obviously want to see, is your shared value model working? Are you seeing the savings on the claim side if you're incentivizing drivers for driving well? And when you look at, you cut the data in all various ways, the graphs go in the direction that you would assume. So better drivers have fewer accidents, and better drivers have less severe accidents when you compare against a base rate. So just talking a bit more to the smartphone solution and how we've sort of brought that to market. So it went on a journey in itself. As I said, we went around looking for smartphone companies that might have been doing this type of tech. And we did an investment in a startup called Cambridge Mobile Telematics, probably around 2013. They were a group of professors out of MIT that had developed an initial version of a phone that could take data and be able to translate that into something meaningful from an insurance perspective, which was quite a complex problem to solve in itself. There was no sensor or anything that existed at that stage, so we've helped innovate that build over the few years. But it was an insurtech type sort of partnership that led us to help us build out the solution. Cambridge themselves have now expanded their business over the last 4 or 5 years. They're now one of the leading smartphone telematic providers in the world. They now in 17 countries, across 20 companies. I think there's more than that. That was only at the end of 2017. But both businesses have taken an amazing journey through this process. So just a bit of why we actually went and built an IoT device. So the IoT device connects over Bluetooth Low Energy to the phone. You can't record a driving trip without it for various reasons in this current form. Basically, we wanted something that was sort of secured to the windshield of the car, so we could get independent accelerometer information from the vehicle itself. It's easier to match devices to vehicles. If you have a phone on its own, you don't know if that person's in their car or someone else's car. With AI today, you can tell whether they're in a bus or something else, but it's quite hard to tell whether they're in their own car. Then you want to identify the actual trips that were taken without the phone. So you've got this problem with a normal smartphone solution, which can work on its own without a sensor, which can detect the motion of the drive and start recording. in that the user can say, okay, I'm going to switch off the device for this particular trip. So if you have a sensor in the vehicle, you can at least record some information around it. And probably one of the key factors for introducing the sensor was that we needed to keep in play the ability to sense if someone has been in an impact and we can reach out to them. So we've developed a full discipline with a 24/7 operation center that calls out to clients when the device is sent back to us an impact alert. So obviously with the box, that's all good and well because it's secured to the vehicle. It was a lot more complex, especially back then, to try and work how to do it with a phone. So the sensor obviously allows you to offer that service. So those were some of the reasons we did it. This is just a fun slide. I thought I'd throw it in there. When we were talking about the solution back in 2012, 2013 in some of the board meetings and working through some of these complexities, we had some whacked idea around, oh, why don't we just build the sensor that connects to a phone? And that's that gimmicky drawing that was put up at one of the board meetings. And then it evolved in 2014 to that first version that you see, that gray little device, which is probably in the market for about a year or two. And today we have it looking like that. So it was also quite a fast-paced build. We developed hardware plus the back end and the solution probably in just under a year. So it was quite an intense time to try and bring this to life. The smartphone itself, for those who haven't seen the solution, basically has a way of engaging with the users. It presents a driver score to be able to tell how well they're driving. And we've also taken the approach to give as much information to the user as possible, so you can drill down into your trips. You can see where you may be going wrong. You can see where you're overspeeding. The one on the right basically, or your left, whatever, gives a view of the overspeeds. And you can click on it and actually get, was it a minor event, major event, etc. We find the more feedback we give, the better someone can help at actually driving and changing their behavior. So just talking more to the value-added services that I mentioned previously. So impact alerts is quite a significant safety feature within our product suite. We've done a number of call-outs and then got a large number of stories where we've really helped save people who have been in an accident and they haven't been able to contact anybody. We also have the panic button feature where when you tap on the side of the smartphone in a certain sequence, it will send a panic alert to our call center to reach out to you. And then we also have a concept of weather warnings, which uses the telematics data, where when we see a certain weather pattern approaching, we'll check where the vehicles are spread across the country, and we'll send a message out. This small example on the side basically shows an event where we showed the alert being sent, and then sort of 10 minutes, a few minutes later, the vehicle actually moved the short space to an undercover area. So we're seeing a significant change in connecting IoT telematics to an actual risk event and changing the behavior for both sides. So an amazing collaboration between the technology offerings. And then just a bit more around the sensor and the impact alert specifically. So some of the reasons, as I mentioned, was we need the sensor from an impact perspective. AI is getting better. We're finding a lot of data analytics in this space. People are making progress. There's this concept of being able to detect an impact directly from a phone, which is possible, but to the extent to which you can, I guess, is still questionable. So like here's an example where in certain cases, the phone wouldn't give us in the information we needed when this bicycle went into the front windscreen of this vehicle, and the sensor gave us a definitive answer in terms of that crash impact. So another reason why the IoT device adds value in these type of insurance solutions. And then just moving more into what data we extract and how we've tried to add value across the business. So the first one that I'm talking to is this pothole detection. We haven't properly launched this into the market, but I thought it a good example to explain how we're using the data to affect, I guess, society as a whole, and then also, I guess, from an insurance perspective. We run a number of competitions within Discovery. Craig's come and spoken at one of them. One is the Inspiring Excellence competition, where we encourage the employees to come with products and concepts to win a R1 million prize. We have an actuarial conference where we encourage the actuaries to come together with concepts. And this pothole detection was a result of one of the actuarial conference. I think it came second, might have come first. But basically what they did is they used telematics data across our base to try and work out where potholes are in the country. And they had a very high correlation. I think they were like about 90% accurate in terms of the data they were receiving. So great value add from just using that data set. And then if you look at distracted driving, we're starting to pull a lot of interesting statistics around distracted driving. How does it affect risk, etc. And we'll learn more and more and more as we collect more data around distracted driving. So the phone itself can actually tell us where someone starts interacting with the device, for how long, etc., which can help us to innovate in that space. And then the Uber benefit, which I mentioned, we introduced it not just as a result of, so it would be cool, let's get Uber into the mix. We actually examined some of the driving data, and we saw that you're obviously 7 times more likely to be in an accident at night. So we looked at the telematics data, trip-level data around it, and we said, is there a way that we can help people get off the road at those times? And that's why it made sense to introduce the Uber benefit. The Uber benefit comes at a 25% discount per trip, regardless of your status, and that's purely from the surplus that you create by saying that if you're not driving at night, there's a massive surplus and there's a massive saving in that space. So give it back to the member and keep them safe in that shape or form. And we've seen significant impact in claims in terms of doing that innovation. Quickly, what we've also started doing is we're starting to take this technology into other verticals which may have similar issues. So insurance is one. If you take a rental industry where they also have issues with accidents, can you change the way someone drives a rental vehicle? You know, what's the worst vehicle that's driven on the road, as they say? So we took the technology, we did a partnership with Avis, we launched it about a year ago, where when you rent an Avis vehicle, you can opt to take the solution, you get the sensor, you get the safety features, so if you're in an impact, we'll reach out to you, and you get an active reward on a daily basis. So if you drive the vehicle well, you'll get a Nando's meal, a smoothie, etc., etc. So just a small way to incentivize you, and obviously then the benefit in terms of the accident savings, and of course keeping the client safe on the roads is how this manifests. I thought I'd just end off and talk briefly to something that we haven't played much in this space, but it's taking off, to home telematics. So there's a lot around here. You can see there's a lot of innovation happening. I guess if you had to segment it, you get the type of consumer-driven home telematics solutions, which may or may not have an effect on risk. But it's cool to be able to turn on your Netflix device with your Google Home. We are seeing insurance companies around the world, large ones, Progressive, etc., trying to use sort of your home assistants to actually get servicing out of it. And these are early pilots that started towards the middle of last year in the space. And then I guess you can get the core IoT units to measure actual risk, water leaks, fire geysers, etc. I think in certain geographies you'll find it taking off much faster. Fire, for example, is a massive risk in some of the US states, and it's a far easier business in terms of the business plan to actually see it play out. I think South Africa is a little bit more complex, but it's definitely coming. And I think this is a massive growth path for smart homes and home telematics coming soon, I guess. So that's basically what I have. If there's any questions or...